But here are the three things that you need to know right now on this Thursday morning. Big tech numbers. We continue to get them. And let's start with Meta, one of the biggest of the bigs. The Facebook parent company seeing shares bounce by 14% after the shares had pulled back by nearly 50% going into this report. And the quarter actually was mixed from Facebook. As we've seen with other big tech players, demand for advertising did wane. It was hit by a pullback in European spending tied to the Ukraine invasion. Also, Apple's privacy changes continue to weigh on that ad spend. Earnings per share on a GAAP basis, though, did beat estimates, even though revenue missed. But perhaps more than any of those numbers, the stock could be getting a boost from Mark Zuckerberg's comments on the conference call.
So over the next several years, our goal from a financial perspective is to generate sufficient operating income growth from family of apps to fund the growth of investment in Reality Labs, while still growing our overall profitability. Now, unfortunately, that's not going to happen in 2022, given the revenue headwinds. But longer term, that is our goal and our expectation.
So that was Mark Zuckerberg on the conference call, seeming to reassure investors that he's not so focused on the company's metaverse developments that he's willing to forego the rest of the business and growth there. Dan Halley, our tech editor, is joining us now with more on all of this. It's a pretty fascinating quarter and tone from Zuckerberg.
Yeah, it is. And, you're right, Julie. That really is basically his way of saying, I'm not just a one-trick pony now when it comes to this metaverse thing. I'm still focused on the larger Facebook side of things, or, Meta apps side of things. But I think one of the other issues that we should point out that was good for Facebook or Meta in the quarter is that they didn't lose any users, right? The last quarter, they had lost about 1 million daily active users on Facebook Blue. That's the Facebook app. That's usually what you refer to it as. This quarter, they saw growth in every category of users. So there wasn't any backsliding there. Growth seemed to pick up a little bit more compared to what it was in the prior quarter as well. And yes, they did miss on revenue, but they did see some good ad revenue. They basically hit it almost. It was $27 billion versus 27.48, which was expected. So a little shy there, but not too bad, especially considering how disastrous Q4 was for this company. I mean, just really awful. And then, the iOS issue still continuing to be a problem. But now we're seeing that it's not just Facebook. Despite the fact that Alphabet had said that YouTube was unimpacted in their last quarter, this quarter, they're now pointing to it. And then obviously the issue with the war in Ukraine weighing on some advertisers and hitting them there. But I do think that it was a good quarter. And the fact that they are talking about not just being about the metaverse is a big deal. And, it's going to take a long time for this thing to take off. I think it may have been premature for the way that they had that big rollout with Zuckerberg announcing the name change, going over the big changes that they want to make, the apps that they want to roll out, the style of apps that they'll have. That's years and years and years away. So I really think that they were too early on that. And just showing how much of an investment they have to continue to make to even get anywhere close to that, I think is what spooked investors. So really saying now that they're going to continue to focus on the family of apps while trying to build that out simultaneously, I think that's really helping out investors here. And analysts obviously agree.
Well, Dan, I call this a Mark Zuckerberg finding religion moment in a story right now on the Yahoo Finance homepage as it pertains to operating expenses. That appears to be the biggest surprise in terms of chatter here on the street. They were looking to spend $90 to $95 billion this year on hiring more people, building out this futuristic metaverse world. Now they're at about $87 billion to $92 billion. So it's good to see Zuck and Sheryl Sandberg at least listening to the institutional investor pushback after that ugly quarter you mentioned. But let's be clear, Dan, this is a different company compared to what it was pre-pandemic and during the pandemic. It's still seeing slowing revenue and profit growth.
Yeah, this is not the huge juggernaut that Facebook or Meta once was. They are slowing as far as growth, and that's to be expected. Look, they have 3 billion plus users on all of their apps. How many people in the world can you possibly touch? Obviously, they want it to be everyone, but there's still people that frankly don't have the internet access to be able to access Meta apps. I do think, though, you're right on the capital expenditures, that being pulled back a little bit. That's a big deal. They're still, though, plowing money into this idea of the metaverse and their hopes for it, you got to figure it's not something, and he admitted it himself. This is not something that's going to pay off right away. It's going to take a while. And, we still don't know if there's an appetite from consumers out there beyond the oh wow factor of this is cool. I can strap on a headset and see this. We don't know if people are going to be willing to put on a headset and wear it for multiple hours a day in and day out. So, we still there's a lot more unknowns than there are knowns when it comes to this whole strategy.
Yeah, I mean, that said, the Reality Labs revenue did come in a little bit ahead of estimates. It looks like it's $695 million. There's one more thing I wanted to mention, guys. TikTok. We haven't talked much about TikTok here as a competitor to Facebook and its various families of apps. Zuckerberg did address it a little bit. He, first of all, talked about the fact that Reels, which is Instagram's answer to TikTok, makes up more than 20% of the time that people spend on Instagram. In addition to that, Facebook says it's going to more actively use artificial intelligence to recommend content, which is more similar to TikTok's algorithm that draws you into content rather than relying more on showing you family and friends content. So we'll see if that works to get people to stay more on its sites than on TikTok.
Yeah, and I think it's important to point out that Reels is just TikTok, right? I mean, go on Instagram Reels and you'll just see a TikTok watermark in the bottom right-hand corner because people are just cannibalizing what they post on TikTok and saying, I guess we have to post this on Instagram as well. The growth really is in TikTok's favor. Obviously, they're a smaller company, so the growth is going to look a lot better on paper than it does for Facebook each quarter, which is massive at this point. But I think that TikTok is just a catchier app. And to be frank, I've had to delete the thing like 5 times because of how addicting it is. Outside of the conversation of addiction there, I do think that it has that up on Instagram, which I can look at some puppy videos and then just go on with my day.
It's hard for me to argue against watching a puppy video.